Investors and traders, welcome to the channel. Market chart pattern today is 13th of May 2024. I hope everyone is having a great day. We will be taking a look at the key US technology stocks in this video. As always, this video is for educational purposes only and it's not a financial advice. So we'll start by taking a look at the daily chart of Apple. And here we can see that the Apple chart, the Apple stock had been under pressure till it hit this $163 per share level, and around this time we were saying that this is a really key level to watch, and moving below this will open up $155 per share level as a target. But what we have seen is a nice uh, rally, or with a big gap when the earnings came out, um, move in the Apple stock, and it's right at the 61.8% retracement of this swing high. And it has just kind of consolidating, and it is going and testing this level again. So moving above this level is really key for the stock. But the good thing is that from momentum perspective, it's looking good, because the 8 period moving average, the price is above the 8 period moving average, is this red line, which is above the 20 period moving average. So this is something which shorter term traders like to see. So that's good. And moving on to the weekly chart for this stock, here we go. What we can see is, here we go. We have had 2 consecutive weeks where the stock actually has held these important levels, and in fact 1, 2, and 3, and we're in the fourth week, and the price is also above the 20-week moving average. So what the possibility I see is that maybe it goes and tests the upper end of the range again, so around the $200 per share level. And what is really important is this $165 to $163 per share level that remains as a support. As long as that remains as a support, there's a potential for a ABCD, which could actually see the stock move as high as $222 and beyond as well. That possibility remains, but the key remains the $163 per share level, which is around the near bottom around here. So that is really key. Now, one of the things which is in the media about the Apple stock is that they have been behind the curve as far as the artificial intelligence goes, but they are doing something about it. I don't know exactly what. So my take on this is just my personal opinion, that Apple has always been like that, where they have actually seen a technology, haven't done much about it, and then they have come and integrated that into their products and done pretty well about it. So for example, just to look at the competitors with iPhones, some of the hardwares and some of their competitors is really good, and then they'll make a release of a newer iPhone, and you'll see improvement. So I don't know whether it's something comparable with the artificial intelligence, but just my personal opinion on it. We'll have to wait and see what the Apple is likely to do. Next, we'll take a look at the Tesla stock. Excuse me. So the Tesla stock, this stock has been under a lot of pressure. You can see that, it's just been going down, down, and down, down. And then around here, on the 22nd of April, it hit this level. We have this smaller ABCD, and we have seen the stock, moving higher in gaps. So there are pretty big gaps left around here. And one of the key levels for us is this $200 per share level, which is 38.2% retracement of this big move high to down. And one of the subscribers, they mentioned that it might take Tesla quite a long time before it's able to break above this. And yes, I agree, that's a possibility. So what we are looking for now is how the stock is trading. So it has come and filled this gap, and it has taken quite a while to do that in terms of number of days. The possibility remains for a further, maybe it can go a little bit further down to this 61.8% retracement, or even go and close this gap. So moving below the 78.6% retracement, which comes at 151, will open up the test for these, for the lows and maybe beyond that. But for now, we'll just watch for this zone. I'm gonna mark this like this so that we will have it marked. Here we go. So that should be a potential zone or region to watch should the stock get there. At the moment, it's just retraced 50%. It's not an ideal ABCD because the ABCD is a little bit lower, around 165. It came as low as 168, maybe close enough. Um, and But it's sitting above the 20 period moving average for 2 consecutive days. Just watching this level very carefully on this zone, and then I will keep you guys updated. But the key will be good close on consecutive daily basis above $200 per share level, in my opinion. That should give us an idea that there is a strength coming in the stock. Now on the weekly chart, what we see is basically this stock had been moving in this channel formation, and here these are the previous symmetry levels. And if we just bring this around here, that also comes around the 207, so nearly $200 per share level. So we'll have a confirmation from a symmetry perspective as well. So that is something good. So we'll just keep on watching this. The week has just begun. We can see the last 2 weeks were actually negative, and it has just gone and tested these highs of this week of 22nd April. We'll take a look at NVIDIA stock, the weekly chart of NVIDIA, and NVIDIA had some pullback here, and then now we can see for the last 3 consecutive weeks it's just going up. A stock which has been this bullish, the chances are maybe it can go and hit that 10,028 level. So, excuse me, 1,028 level. So $1,000 per share level is kind of yeah, achievable. Because it remains above the 38.2% retracement and above the 20 period moving average. Now, one of the things about the artificial intelligence related stocks is that what I'm people who are familiar with the field, they are kind of also suggesting that maybe this artificial intelligence will fold in different waves, and we have seen a first wave out where there has been a lot of talk about and progress with regards to uh, processing of the data and the chips being out there to help with the computation. But in order to make further advances in this field, what the companies are realizing is that they need massive amounts of data centers to be able to store, process that data. So there's going to be a second wave. So what we can see is perhaps a pullback coming in some of these big names which are related to artificial intelligence. So I wouldn't be surprised because of this if we begin to see a trading range, which we are already seeing a trading range in a stock like Nvidia since 8th of March is just going in a pretty big range around here. And also one of the key levels that we are watching is this 61.8% retracement and this low of 755. So going below that would actually mean that we are in this structure ABCD to the downside, in my opinion, which will actually take us towards the bottom end of this range, very close to about $661 per share level. So that is one possibility with the stock of Nvidia. And of course, the other possibility, taking a look on the weekly chart, is $1,000 as a psychological level. It came as high as 974 even Steven, and you know there we go. So something just to watch for these levels in Nvidia. Now let's take a look at Microsoft. That has been another stock which has benefited through the boom in the artificial intelligence, because of its relationship with the OpenAI. Um, they are a partner in that. I think Microsoft owns a fair chunk of it. So what we are also seeing is since March, late March, this stock is also in a sideways trading range formation, and it is also being held up by the 61.8% retracement, coming around $391 per share level. Now, if we look at this on the longer term weekly chart, this 433, which is the 1.618 expansion, has been the really a level which has been pretty strong resistance for this stock. You can see the number of weeks it is there. So maybe we might also begin to see an ABCD kind of correction in this stock as well. And we have seen a pullback, and now just market is kind of going towards a recovery high. So we'll just keep on watching this. We do have slightly higher targets as well for an ABCD, um, but with the market just being around here for this long, the chances for a pullback perhaps increase. So this is what we are watching in Microsoft. Now let's take a look at the stock of Meta. Here we go. So Meta also benefited through the artificial intelligence related hype. And what we can see is that the stock pulled back right into the 38.2% retracement, and of this swing low to this swing high, and it's just above that, which is good because if we look at the daily chart, which we'll do in a moment, one thing I just wanted to point out was that it kind of made a top between the 1.272 and 1.618 expansion. So although it's doing rather well with this recovery here, and on the daily chart, what we see is these key levels around here. So in my opinion, as long as it remains above 406, it's good. Below that, yeah, we it would have closed this gap completely and started to move lower. Might mean that in fact we might be in a leg like this, which is one-to-one price projection. Now I don't know where the top is yet, but here we go. If we were to look at it, it's right at it's retraced about 50% as well, so it also closed, um, not 100% closed, but it has actually filled this gap as well. So yeah, um, this gap got filled, this gap got filled. Now really watching this market carefully to understand whether it's an ABCD move towards to lower, where we could see the stock going as low as 375, or it just remains buoyant and go sideways to higher. Now let's take a look at the stock of Netflix. So Netflix, yeah, it's going for these highs again, on the daily chart, on the weekly chart. Here we go. Yep. So I think this 634 is a really key level because it was this ABCD, but where the CD leg got extended by 1.618 times of this AB leg. So and it was also very close to these all-time highs. Really needs to move beyond that to be able to tackle those all-time highs. Um, so otherwise, still there is a possibility if a pullback happens, maybe it could go back to about $493. This is what we're watching. Then let's take a look at the Shopify stock. This is when the earnings came out last week. This is one pattern that we were watching. I think in one of the videos I had actually mentioned just before the earnings were coming out about this pattern formation. Now the interesting thing is that this pattern has actually been shattered, so it failed because the stock moved lower. So it was coming around the $62 per share level with the ABCD, but look, the stock has gone to 58, and there is a potential it can go even as low as $54 per share level because that is the 78.6% retracement. However, we have this nice trend line, and that might prove to provide support as well. So that possibility remains. This was a confluence level which is around here, but that has actually not worked. So this is one thing to watch, that patterns can actually fail. So if we just look at this from a longer term, the possibility whether this was just a rally in a bear market for the stock is still there. Um, However, if it begins to recover, $100 per share level, could also be possible because we have this bigger ABCD going to 95, so possibly even $100 as well. So it all depends how it's going to recover. Right now, we can see that this is when the earnings came out, a big gap down. We have three consecutive negative closes for the stock. Today is kind of forming a very narrow trading range formation today. However, this 54 level, that's the 78.6% retracement from this low to that high. um, this is where the stock could actually go up maybe $4 lower. That remains a possibility. Last but not least, let's take a look at Roblox. Roblox also disappointed us. We were watching for this pattern formation here, which looked like it was providing good support, and then it actually went a little bit higher than this swing, and then the earnings came out, and boom, it's just gone lower, right to the 78.6% retracement. So this stock is in a big trading range. So let's just go back and see this in um, on the weekly chart. It just keeps on coiling like this, like a spring formation, but there is a lot of resistance here in the stock, uh, which just keeps the price down. So I think we'll just keep on watching this one, um, and for stock to go this long for this much spring-like formation. Maybe it is accumulation, but then we have these earnings which come out, and what we see is the stock plummet as well. So disappointing price action. We'll just keep an eye on this. In my opinion, really needs to begin to close above the 47 and 54 level to be able to go and target the 38.2% retracement or $67 per share level. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.